Welcome to Wall Street Confidential. We are talking about First Solar's blowout quarter. Just to recap, 70 cents per share. That is up from 11 cents in the year-ago period. The stock's up more than 20%. I've got Jim Cramer here with us now. Welcome, Jim.
Yeah, I've liked the stock. Now, candidly, I liked it at 50, and I liked it at, I guess, 250, so I obviously didn't get off the bus right. But the reason why I didn't is because it's so hard to find a solar play that actually has earnings. This one does. They did a number this quarter that I thought they might have done a year from now. This is an extremely lucrative solar play, and that's because they use a different technology, and that technology is cheaper than everybody else's, so they really are the solar solution.
It's so hot, though. You think there's a lot of risk here, too? I mean,
well, you know, I just think that what's happened is that we've kind of broken the back of the market in the sense that all the momentum plays of 2007 have been obliterated, with the exception of ag. I won't go into that in a second. So, I mean, when you have a stock like ISRG, which is a really good company, that's great growth, First Solar, really good company, great growth. These are really profitable companies with that are very low multiples, even though the interest rates are way down, the multiples should be expanding. What that is because it's classic bear market behavior. People are switching. There's a bear market in what was a bull market, which is momentum, and the bull market is an early cycle. Obviously, always hostage to the Fed. The early cycle stocks, the banks will be pushed back if the Fed doesn't keep cutting because there's too much credit risk. But I would urge people to be very careful momentum, because what's happened is you'll get a really great day because of earnings, and then it'll punctuate it. And then they'll just be down, 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 down. And if the earnings aren't any good, or even suspect at all, have any hair on them, so to speak, like Apple and Google had, then you just get clocked. So, I mean, and then they'll bottom out. They do bottom out. Things do bottom. Apple's bottomed. I think Google's bottomed. I just don't know whether they'll go right back up. In terms of ag, I mean, right now there's Bunge's down big, and that's because the wheat futures went up so much that they have to put more capital in for margin calls. So they. Even though I think it won't really impact their bottom line, they're stretched. They're stretched for capital right now because of the way the futures are. I noticed that potash went to its 52-week high and then came back down. Deere is not being viewed as being that good. That's momentum. See, that's what happens. All the things that are happening in Mosaic, Agrium, they're all really bullish. I went through that Deere quarter. It's really good. But momentum does not work as well here as it did last year, and that's why I wrote that piece.
All right. Thank you very much, Jim Cramer. For more on this piece, check out Real Money.
Yeah, although I didn't reveal the margin stuff about Bunge, which is why that's down. No one knows why it's down. I just told you.
All right. There you go. Got even more than you asked for. This is Wall Street Confidential. Stay tuned.
That's your action point. Take advantage of it.